A lot of economists have scratched their heads.
Yeah, I bet. So from what I've gathered, it goes like this. You take the value of a country's exports to the U.S.,
Okay.
you subtract the value of its imports from the U.S.,
Right.
and then you divide that whole thing by the value of its exports to the U.S. again.
Right. So you're looking at the imbalance in trade
Compared to...
relative to their exports to us.
Okay, and the EU is a good example of how this works out.
Yeah, their trade deficit with the U.S. when you do that math.
I was looking at that earlier. It comes out to like 39%.
Around there, yeah.
But then the U.S. decided to chop that almost in half.
Down to 20%.
Right. So it's not exactly...
That's a lot.
Yeah, it's not like they have a 20% tariff, so we're going to hit them with 20%.
No, it's more nuanced than that.
Yeah. Okay, so there's that, and then there's this baseline tariff.
Right. Even countries that have a trade surplus with the U.S.
Meaning they sell us more than we sell them.
Exactly like the U.K., for example.
Yeah.
They're still getting hit with a minimum 10% tariff.
Wow. So even if the math works out in their favor...
They're not off the hook.
They're not.
There's a floor.
A free pass.
Yeah. Okay. So that just goes to show that it's not about matching tariffs.
It's really about...
It's about the overall...
The bottom line, who's selling more to whom.
Gotcha. Okay. So this is where the experts are starting to chime in.